Good morning, everyone. It's 8:01 a.m. on Wednesday, the 5th of October, 2016. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. The main drive today is towards risk, seeing markets moving towards equities this morning. Gold recovering a little bit. Gold up 37 basis points, about it's up about $5 after the big drop through 1,300 yesterday. Um, and crude oil's also up strong, trading at 49.62. 49.62 November crude, up almost 2%. The rest of the funds are being pushed into the equities market. The British pound remains near 31-year lows. Pretty big, move on there. Uh, as far as what we're expecting today, I mean, we did get ADP overnight. As I said before, I'm not going to go over the news. We did get ADP, and today we have a slew of bank, central bank governors speaking. But what's on deck today is 9:45 Eastern, all times Eastern from now on. That's New York time. 9:45, we have U.S. Services PMI looking for 51.9. That's a medium importance number. Durable goods at 10, expecting zero point 0.0. That's a fairly high importance. Factory order and ISM non-manufacturing factory orders expecting negative 0.2%, and ISM non-manufacturing looking for 53. So we're looking for some reaction at 9:45 Eastern, and then again at 10. We have DOE gasoline and distillate and crude oil inventories. Crude oil is looking at 1.5 million barrels. Distillate's looking for negative 1.5 million barrels, and gasoline inventories up 500,000. And you may have seen yesterday, I did tweet the numbers for the API crude. The API crude after the close, and that showed a draw, causing a slight push up in crude oil. So it's going to be interesting to see what happens there today. As far as the Fed speakers that are remaining at 8:30 this morning or 9:30 Eastern, right at the cash open, we're looking for Fed Speaker Kashkari. He's giving opening remarks, and then we're looking for Fed Speaker Lacker at 5. That's after the futures close. Fed Speaker Lacker and the rest of the speakers were overnight out of ECB and BOE. So that's how things are shaping up. Let's take a look at what we expected versus what we got yesterday. Again, my aim is to keep these videos down to about 10 minutes. Here's the primary expectation from yesterday. The market ended up rallying a little bit from where I show here. They ended up opening a little bit higher. But overall, the primary expectation yesterday was for a drop. The main trade idea is for a push to 2141 is the number that I had mentioned, with a slight bounce at 2146. The secondary idea is for a test down initially to value low from where we were, and then finding a base and then pushing up. So that was the secondary hypothesis. The primary hypothesis, for those who are curious, is driven by the fact that the POC or value has moved lower from day to day, and the prior day was completely imbalanced. Just a textbook histogram, Gaussian histogram of volume, showing us that the market really settled in on these lower prices. And then we'll look at the major profile here in a minute. But here's what the market did. Here we go. So a quick run through. We're going to ram this all in here. A quick run through. Here's where it opened at 2155.75. I expected it to open around 2153. It tested higher. It tested the prior day's high, and pushed higher. Then it dropped through, and you can see here the first opportunity. The first opportunity was right there, which failed. We had an impulsive move down with a nice little zipper at the low, giving us a slightly weak low. Was looking for a pullback continuation. That did not happen. It ended up pushing all the way back up. Not fun. But that's just the nature of the market. Now we have a double bottom at the IB low right there. And there's a statistic that goes with that. The distribution between these is wide enough. It's beyond 15 minutes. So we're looking for an extension lower. We did get the extension lower immediately. Very, very poor pullback. And there's the tag of 2146. Even that first target. Now here's the next key setup. Pull back to mid. The caveat here is you had an impulsive move, pullback and extension. This could turn into a push up, higher pullback, and corrective back up. So taking this trade means securing your risk fairly quickly, and there it is. You see it right there. It's going corrective. But overall, just a lot of chop yesterday. Tough trade early on until the ECB rumor that they're starting to speak about a taper of the QE program, and that's when things started to get funky, and the market started to drop here. And that changed things a little bit. We did push to the 2141 right there. That was our key extended target, which is an HVN, a high volume node, and then the market chopped around in that area and ended up pushing the point of control down to the MC point of control from 9.9 moving forward. At least that's where it was formerly at 2142.50. So a lot of noise back here, but once this impulsive move happened, we started to see some structure, and it started to trade in a way that allowed for some recovery. Tough day, tough day as far as trading structure. The last key opportunity was the pullback. You see back here 21.45 before the run to the prior day's high. Was looking for a pullback to there, and the low volume node. I talk about this in webinar 2 on my website, the importance of these low volume nodes versus the high volume nodes. And you have a pullback to price structure and a low volume node for a small rotation of about 4 points. That's what we had. Now, what happened overnight? Here's what we got overnight. Generally, the overnight session traded in, again, a balanced profile right up against yesterday's point of control, accepting that range. It looked like if it wasn't going to pop, it looked like we would have a continuation lower today. And then what we got is a pop here at 6 o'clock in the morning. And the market is still trading above the mid of the session. And in the upper distribution, the expectation is that we'll likely have a small pullback and a continuation higher. So, by the way, I wanted to show what that news, the ECB news, looked like on the Bund. So there it is. This is the news bar right here, right at the European cash close. Some pretty good delta volume right there. The market just drops through because essentially what they're saying is they may taper by 10 billion euros a month, and they've been buying treasuries. So this is a product that's going to feel that immediately. And of course, being a treasury product, it's very susceptible to whatever the ECB does. And then it dropped, and then it did not get an extension on the impulse till the last 15-minute bar of the session, way past the European markets closing. This morning we open, we push right up into the LVN zone early on, and then we continue the drop lower, and we continue this 1, 2, 3 kind of push this morning in the Bund. So that's some pretty interesting movement there. As far as what we're expecting today, so we can conclude this, We're going to push this profile forward. If you did not see this on Twitter, I posted a walk forward of this profile. Now I'm going to include today. If you didn't see it, I would welcome you to. I'd invite you to go see that, how this profile has formed since September 9th. And what this profile is telling us, essentially, let me thicken up the line here. What this profile is telling us is that we're not exactly doing the classic, we're achieving consensus somewhere in the middle. We like the prices in the middle. What we have is a profile that has many peaks, but is fairly blunt. Um, so what this is telling us is if you chain the days together, and this is only for the day session, if you link the days together, what the market is doing is a lot of discovery, and it's not finding consensus here. It keeps shifting the point of control up, down through time. The point of control is back at 42.50 based on yesterday's action. Again, as I said, this point of control is exactly where yesterday's point of control was, and we are accepting these prices down here. We're trading at 48.50, which is above the LVN from yesterday. So this morning, the expectation is for a market that again is opening in, this isn't quite value, but it's opening in range. The expectation is for push lower, 42.50, and looking for reversal to the upside, move towards this high volume node, bounce around in there, and then looking for a push towards 21.59 this morning, close this open gap up here. That's hypo 1. Okay, and the reason for that is the market has bought every time it's come down here. It has been bought, and we are still in this balance zone. So we're still trading in a very, very well-known area. We still have a pretty heavy distribution below us. We still have a very, very heavy distribution above us, as I've shown you on the weekly, and we're in the middle, and we keep moving back and forth. The expectation is that continues. If the market opens and it tests higher immediately and fails and starts to push the opening swing low, then I'm looking for 42.50, a pullback, a deep pullback like we saw yesterday, and then I'm looking for it to release to the downside. The next key area is the 32.75, and that's likely to be your next target. So that is hypo 2 for today. That is what I have for you. Let's keep this short and sweet. Hopefully you're minding your risk and picking your spots, and just being patient in the morning while it's chopping around, so that you can take advantage of opportunities as they show up. Good luck, and I'll catch you tomorrow. Take care.